If you're selling an asset worth $250,000, does that make sense? Probably not. And so it's understanding those types of things. And in the goal that we have when a client comes to us and says, hey, I'm looking to sell, the first thing is, one, come to us before you sell, ideally way before you sell, so that we can start to build out this structure.
So I'm curious, like when you're looking at cryptocurrency and some of these massive gains, like if someone comes to you, Mike, and is like, hey, I need an advanced strategy for deferring this capital gains tax on cryptocurrency, what comes to mind, Mike?
Yeah. So, when it comes to advanced planning, I think that first off, it's understanding what are we selling. So, if we're looking at advanced planning in an exit strategy, there's a lot of options out there. If you look at real estate, you have what you guys are offering, 1031 exchanges, various different things there. And the second piece is, what does the gain look like? Because that's going to bring some strategies into play, some strategies not. Because if we're looking at certain strategies, they might have a hard cost of saying, okay, to set up this legal structure to do these different things, it's a minimum $100,000. Well, if you're selling an asset worth $250,000, does that make sense? Probably not. And so it's understanding those types of things. And in the goal that we have when a client comes to us and says, hey, I'm looking to sell, the first thing is, one, come to us before you sell, ideally way before you sell, so that we can start to build out this structure. But that's just understanding, okay, what is the asset? What's the gain looking like? And what do you want to do with the funds afterwards? And that's going to kind of go down the route of, okay, what strategy are we going to lean towards? What strategy are we going to look to get in front of them?
Okay, great. So I got the answer for you, right? I'm selling $10 million of Bitcoin. I'm a married couple, right? I'm married, and my spouse and I. And my gain is it's 100%, right? It's basically, I bought it for a cent, right? So it's all gain. I'm in Taxifornia, right? So I'm facing state, federal, Obamacare, unless it's real estate. Let's just say it's 3.3 million of tax liability, right? I don't want to spend it on anything personal, Mike. I just want to invest it, keep it rolling. And what would you say? Like, I'm curious, like what would anything come to mind?
Yeah. So kind of our go-to in that realm, just from that basic understanding, would be idea of a charitable holding company, charitable LLC. If you kind of look at the idea of when Mark Zuckerberg said he gave away 99% of his Facebook stock, we believe or understand that this was kind of the structure that he set up when he utilized that. Again, very complex, very different ways to do it, but that's kind of the route that we'd go down in that fact pattern.
Okay, cool. Excellent. I appreciate you sharing that. We have something called a deferred sales trust. By the way, I don't know if you've ever heard it before. 27-year track record, thousands and thousands of closes. My business partner is a CPA and a tax attorney. He created it. And my role is a trustee. And you don't have to give it to charity. No life insurance required. It's an installment sale with the trust. So it's based upon one of those core strategies of an installment sale, actually really easy to understand. The trust and the trustee add a little more complexity. Expenses about 1.5% to 2% on a recurring basis, about 1.5 to set up. But we've done it for real estate, business sales, cryptocurrency, stock, primary homes across the country. And it's super flexible for the reinvestment of the funds back into other deals, kind of like a self-directed IRA, back into real estate that you can run, back into businesses. Or you can be passive and just be retired. And so we've got a lot of traction on it. We wrote a book on it called Building a Capital Gains Tax Exit Plan. And we had Kevin Harrington from Shark Tank, who hit number one bestseller on the book. But I'm curious, had you ever heard of this before, Mike, before our call? I wonder, because some people get confused with the Delaware Statutory Trust because it says it's DST. But had you heard about this before?
I've heard about, and I don't know if it's been labeled that exact word, or like somebody else using a different term to describe it, but definitely heard about kind of the overall structure of it, but have never dig into the full details.
Yeah. Oh, cool. Well, yeah. If you ever want to geek out about that and meet my CPA business partner, maybe we can do that on your podcast too.